Uranium Friends checking in on URNM. So, why am I doing this video? So, space seems to be getting a little bit of a shift. There's nothing to quantify it other than what I feel. Because when I look at this weekly chart, I look at the action, and everything's fine, right? Everything is perfectly healthy, which it is. So, but there's a couple of things that I do want to look at, and I'm just sharing this. This is not telling you to do anything. I am just sharing my observations and my feel for the space at the moment, sentiment wise, and volume wise, and breadth wise, and technical wise, however you want to look at it. So, with URNM, and I'm prompted this video today really because of the way CCJ has been trading, which in my opinion is not trading very well. There's a couple of guys that we trade CCJ every single day over at the chart guys, and we're kind of in agreement here. Things are very different. Today was a tough day. There was just no volume, but regardless of that, liquidity was very very poor today, and it did seem like there was some sort of liquidation, ETF redemptions, possibly, just by the way there was the action. But regardless of that, we're on URNM. So I'm looking, and as if anybody who's watched my stuff, you know that I do use this moving average setup as a metric. So, and I notice, and I talk about this all the time. Yes, the commodities like to ride, and that's exactly what they're doing. So, is it healthy? It's perfectly healthy. But what I do start to pay attention to is how stretched out these guys are from 200-day moving average, right? So when that happens, I'm not, again, this is not predictive or anything. What I want to do is I want to look back at the history of the name and see how it acts. So when I'm on this weekly chart, I look back at the history of the name and say, where I see the EMA, the moving averages stretch away. So, you can say whatever you want about this particular run, whatever the fundamentals are. It's exactly the same. It's the double moving average rider all the way up. It's exactly the same, right? So, the true shift was this break here, and it made its way back to the 200-day moving average, right? Same kind of deal here, right? It just rode up these double moving average again once it made its bounce, and it made its way back to an undercut on the 200-day moving average. So I just like to take measurements. So, the first thing I did was I took a measurement, and I want to see the distance between these top outs on this 50-day moving average down to the 200-day moving average, right? So what do we get? About 23, 24%, right? Same type of deal over here. I just want to look at these moving averages and see what the distance is. What are we looking at? 23, 24%. Let me zoom in just a little bit over here. Okay, so that's what those runs were, 23, 24%. What's this one right here? That doesn't really make a difference to us. So, if it's this 50-day moving average, this double moving average thing, just like we saw earlier on, we're about 20% away from the 200-day moving average. So it's kind of starting to get into that spot with the moving average distances and the spreads where it might want to rectify itself. So now I'm looking at this weekly chart, RSI. We have a bit of a divergence here, right? So this is a little bit of a bearish divergence. Not the biggest deal. I don't get crazy about RSI divergences, but I do pay attention when other things are occurring. What's the average size of the pullback on these once we get the break? From the top to the bounce, 28%. From the top to the bounce, 42%. Let's see this one. The top to the bottom, or where the bounce is going to be, 42% again, right? So starting to put the picture in my mind. What was this little pullback here to the bounce? 16%. So I start to look at it and say, okay, I feel like 30% is a reasonable spot. I'm just taking an average, and I'm just being very general about this. So I'm trying to think about where I want to be targeting wise when I want to try to add to my position, because that's the way I'm looking at it. I'm looking to add. I'm not really looking to be short. I might take some hedges on, but I'm just looking to add. So I'm starting to come into my mind like I start to think about these things early. Where do I want to add? So do I want to add a 200-day moving average? Yeah, it makes some sense, right? So we just had like an average of a 30% pullback. So let's just take this multi-top here and pull down 30%. Yeah, it gets you down to this Fibonacci retracement, the 62% retracement, which is always referred to as the golden pocket of this whole move. And so it puts together a picture in my mind. And now I look at all this action that's here, and then I look at this volume shelf. So I'm starting to get a picture in my mind where I want to add. And that's all I'm trying to do here. I'm not trying to tell anybody anything as far as whether this is going to go there or not. But this is going to be the spots where I want to add. Now, if I want to stop out, um, you know, I have a very clear metric for stopping out, and it's these moving averages. If they break, it's stop out, right? That's the way I look at it. It's a pretty definitive signal when you get this 50-day and this 12 EMA break. You get good downside off of those breaks. So if you stop, and say, "Oh, I'm going to get stopped out, and it's going to bounce and run without me." Well, listen, in my opinion, I just buy it back. I don't care. It was a fake out, and I'll just buy it back, and I'll just make the money. Other people don't look at it that way, but there are some pretty clear, definitive signs that when this metric, this double moving average, the 50-day and the 12 EMA, when they break, you get some good drawdown off of them to the tune of, like we said, about 30%, right? So that's 32%. When this breaks here, what's the drawdown? 33%. Um, didn't really have it. Okay, so we're coming into that scene again that we've seen. Let's look at this. Let's look at this drawdown here, right? So 21%. So this was a little bit more shallow. Okay, so listen, we average those three together in top of the head math, let's say 25, 26%. That's what I'm looking for. So 30% gets you down to this golden pocket, gets you into this zone of truly, which is where the point of control is on the lifetime of this chart. So that's what I'm looking at. This is the level that I'm going to be looking to be adding. Um, Here's the difference on this run from all the other runs, and it's you can see it in this chart, right? So quick, very volatile run, pretty severe, snappy pullback, right? Quick, volatile run, snapback, quick, volatile run, snapback. So this is different. I have to say this is a grind. So what could be expected here, in my opinion, is that um, uh, barring some sort of catalyst or something to that effect, uh, that's negative, I could see this thing just slowly, slowly chopping down because a lot of support has been built along the way up, right? So you're going to run into some zones where there could be some baby bounces along the way, which will, could feed people with the opportunity to either add for get little bounces or, to because they missed their first stop out, maybe they end up wanting to wait for the bounce and then that's going to be their stop out. They're going to sell out over there. So this is basic market behavior. This is a very retail driven sector. There's a lot of retail traders in here, not as much as institutional buy and holders. So, that type of behavior with the algorithms and the lack of liquidity in the broad market could glean something like that. So, we've got a lot of levels here to work off of. Um, I posted, I'm not worried about anything with URNM until 46 breaks down. But we do see that when this double moving average metric breaks down, it gets a good break. So that's what I'm watching for. I don't like the feel of the market, but that's at the moment. But that's That's not enough. I gotta add some technical flavor to it to see what it is. So 30% drawdown would not be surprising to me, and that would get you down into 200-day moving average. It would get you down into the golden pocket of this last run. It would not be the worst thing in the world as far as the long-term chart is concerned. It will be very, very painful um, for people that are in it right now. So, you've got multiple tops up here. So this is topping action, just like there's a bottoming process, how people like to, describe things as a bottoming process. Well, there's a topping process. Is this the topping process? It's starting to slightly feel like that to me. I'm not saying that it is. I'm just saying it's starting to feel like that to me. So, what do I do in situations like this? I usually try to get some hedges on. And it doesn't even necessarily have to be in uranium, right? So, maybe I'm going to short XLE or something like that. And by the way, XLE is taking a beating. Oil is taking a beating, So we've got some key levels on XLE that are going to need to be held as well. We could be watching that as well. So that's it on URNM. Space is a little shaky right now. I mean, CCJ was a tough day today, so we'll see how CCJ plays. It's a metric, Watch CCJ, watch NXE, watch UEC. These are the big boards that are controlling the space as far as trading is concerned. Over and out.